It is your breakfast rush. It's 90.4 FM in Durban, 105.6 FM in Peter Maritzburg. And keeping in that theme, today's theme seems to be taxing or taxes. Smart taxpayers make a difference. That's a campaign by the tax ombud that we spoke about a little bit earlier, and I'm glad you were paying attention to that. Got quite a bit of interaction on that topics. I'm really happy that you were paying attention to that one there, because now we're talking to the folks that can sit across from you at a table at the privacy of their offices and work out what you need to be doing with regard to tax season. For this tax season. So, in studio with us, we've got the team from Kharwa Financial Accounting Services, and this morning joined by Zubair and Nabeelah, as they do every Thursday through tax season. Zubair, today we're talking about, well, firstly, Assalamu alaikum, welcome.
Walaikum salam wa rahmatullah. Jazakallah for having us again.
Always a pleasure having you in the studio. Today we'll be talking about all things provisional tax. Before we go into the whole story, tell us, what is provisional tax?
Nishal, we've covered this topic before, but just to refresh the memory of the listeners, is a provisional tax is not a separate tax. It is a process whereby a person pays the estimated tax every 6 months. So to rephrase, this is your normal income tax, which is paid every 6 months.
Who needs to pay provisional tax? Is it all of us?
There are two types of provisional taxpayers. The first is individuals who, apart from their salary, earn any additional income. To simplify, if a person earns a salary, but they also earn rental income or interest income, or any other form of income that is greater than 30,000 Rand per year, then they need to submit a provisional tax return. The second is your registered businesses, which includes companies, CCs, and individuals who trade as sole proprietors. For these taxpayers, provisional tax returns become compulsory.
So how does one register for provisional tax, and when is that tax paid?
So there's no separate registration for this provisional tax. It's just a matter of submitting and what is called an IRP6 at the appropriate time in making the payment. So the question you ask is, when do you pay this? It happens twice a year, at the end of August and in February. The payment made in August is based on income for the first 6 months of the year. Now, when we're talking about tax year, we're talking about from the 1st of March to the end of February. So 6 months from the 1st of March will be from the 1st of March to the end of August. And the second period will cover from the 1st of September until the 28th of February. So those are the two periods.
So for some, the provisional tax payment is in addition to the PAYE that is paid?
Yes, that's correct. PAYE is based on your income from your employer. So your employer will deduct the monthly tax paid over to SARS and then pay you, the employee, a net amount. But your employer has no knowledge of your other income. It is your responsibility to ensure that you report all of your income and expenses accurately to SARS. Provisional tax is calculated on income you earn aside from income from fixed employment.
Just jump in there.
Yeah.
Nabeelah mentioned something very important, is that people who are earning a salary tend to, let's say, forget that they have other income, or they hope that nobody else will pick up that they have other income. But in this digital days that we're living in now,
Right.
it's just a matter of time before SARS looks at your bank statement and say, hold on, you said your salary is so much, but there's other income coming. There's just an adder, just a filler for that.
What happens if it's a gift?
So gifts, there's part of the income tax is, if somebody can give you a gift, if it's over a certain amount, the person who's giving the gift becomes liable for tax on that.
Right.
So even that, so it's deemed to be donations. There's certain thresholds that need to be passed.
Yeah.
But the person giving the gift could be liable for donations tax.
Donations tax. Okay. So getting back to what we were talking about just a moment ago with regard to provisional tax payment, in addition to PAYE that is paid, let's flip the coin and say, what about those who are self-employed?
So the same principle for provisional tax applies. The tax is calculated based on the business profits. So self-employed people are deemed to be running businesses. They're working for themselves. Hence, nobody's deducting PAYE. So they should be paying provisional tax.
How is it calculated? Is it a guess?
No, it's not a guess. Payments are based on the taxpayer's estimated taxable income. So that's all your income earned, less all the amounts that are exempt for tax, as well as taking into account any permissible deductions. So for example, let's say we're doing the first provisional tax payment, which is due now at the end of August. The taxpayer needs to work out actual income less expenses from the 1st of March to say the end of July. Then you estimate the income for August. If the estimated tax is way off from the actual tax, the taxpayer will be hit with an understatement penalty. What we've also seen recently is that SARS is now auditing the provisional tax returns. So they want to see the basis of your calculation and how you arrived at that amount. You can't just, decide on an amount and say, oh, that's what I'll pay.
Yeah, the days of guessing are over.
What happens if there's non-compliance? What's the consequence of non-compliance?
So failing to adhere to the timelines as a provisional taxpayer comes with harsh consequences of penalties and interest. The mistake people make is to assume that they do not have to file a return or pay provisional tax on their other income because it is not that much. That is a big mistake. That not much mentality costs you later.
Oh boy.
What's the benefits of submitting provisional tax returns, Nabeelah?
Benefit, I'm not sure anyone will consider filing or paying tax as a benefit. But nevertheless, the first benefit is that it does help to manage your cash flow better. The second benefit is that you won't be hit with the penalties and interest. And lastly, you have more time to submit your tax returns.
So let's look at benefits separately.
Yeah.
So you get to break your tax into 2 to 3 payments as opposed to having to pay everything in one payment. If your total tax paid is less than 80% of what your tax should have been, then SARS will hit you with understatement penalties. So if you calculate and pay the provisional tax correctly, you can save yourself up to 20% in penalties. Non-provisional taxpayers have to submit and pay their tax by the 23rd of October, whereas provisional taxpayers have up to the 22nd of January 2027. So basically, you have more time to submit. Nishal, now that we're off that topic, I just want to add one thing that I thought about this morning. This whole SARS travel declaration, and I know it's not part of the script.
Yeah.
But just as information for the listeners, I saw a TikTok this morning.
Right.
And the lady talks about when you're traveling overseas, you have to do an online declaration. This has been in pilot from last year sometime. However, from the 1st of July, this has become compulsory. So any person leaving South Africa has to do online SARS declaration. And when they're coming back to the country, they have to do declaration again. What's important in this, and I think listeners need to pay attention to this, is, say for example, you're leaving South Africa, you're taking your cell phone with you, you're taking your laptop with you, you have some jewelry with you, and things like that, your chargers and your power banks and things, digital camera.
Yes.
It's very, very important that you declare that on your declaration when you're leaving South Africa. Because when you come back to South Africa and that custom official says, hey, Baba, come here. And now he sees you have a cell phone in your hand. Never mind, it's broken and beaten down. He could charge you customs on that. So it's important when you're leaving the country, declare.
Even jewelry you're wearing?
Even jewelry.
Oh dear.
So I heard one of my clients told me recently that one of his cousins or somebody came back and they were at the airport and the custom official charged them for their cell phone, which they didn't declare. It was their own cell phone.
Right.
And I thought, hey, that does not make sense to me. That doesn't make sense. And then I was looking at the latest, and they were correct.
Yeah.
Because if you don't declare it going out of the country, when they come back, they're assuming that you bought it.
That you purchased it there.
So the jewelry, the big ticket items.
Right. Anything of value, really.
Anything of value. Because you don't want to come back and not fight to the customer official and say, but I took it there and look at the scratch. And you're not
so, Zubair, the escalation to that question for me would be, at which point in time are they now going to start checking and charging you for the clothing that you took and went with you, for the underwear that you packed, for your toothpaste and your toothbrush? When are they going to say to you, listen, the lock that is on your suitcase, we need it to be on this list? I think, my question would be, does this happen in other countries?
maybe not to this extent.
Right.
But in terms of the customs duties, customs laws worldwide,
Right.
yes, it does happen. So there's an obligation on any traveler to declare what you bring into any country
Yeah.
and what you're taking out of that country, and any extra items over and above the threshold you need to pay customs on. So it's something that's enforced worldwide.
Worldwide.
You see, South Africa has now gotten up and started enforcing the laws. In terms of your personal items like your clothing and stuff,
Yeah.
I think anything within reason, and there are thresholds that you're allowed to take out, and I can't remember offhand now.
Yes, yes.
But anything within reason. So let's say, for example, you took 5 pants, 5 shirts, and you went overseas, and you come back with 50.
Right.
Then obviously you're doing
went
some sort
shopping.
of business, some sort
Yeah.
of shopping
So
idea.
they're looking at multiples of the same item coming
Yeah.
back. Like, I mean, if you go and you see a jeans you like,
Yes.
you buy 2 pairs because, you're not going to go back.
Go back
That's
for a while.
reasonable.
Yeah.
But if you're buying 15 pairs of the same jeans,
That's retail.
questions are raised.
There we go. I think we should delve deeper into that one day down the line and get more information to our listeners. I want to thank the both of you for coming through this morning. Always an informative conversation. Nabeelah, if somebody wants to pursue further conversation on topic, how would they get a hold of you?
They can contact us on 031 207 4440 or via WhatsApp on 084 578 6626.
Again, thank you both for coming through and have a blessed day going forward.
Jazakallah.
Thank you.
Thank you very much.